More than just business news, we're news for business people.
Good morning, you're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. First, let's look at the headlines this morning. Asian stocks have opened weak. They're tracking cues from the US markets, which fell post the release of the minutes of the Fed's last meeting. The Nifty will shuffle its pack on the 2nd of April. Bajaj, Finserv, Titan and Grasim will be the new entrants, while Ambuja Cements, Aurobindo Pharma and Bosch will make way. The Employees Provident Fund Office lowers the rate of interest to 8.55% in FY18 from 8.65% in the previous year. And the GST network simplifies filing of Form 3B. Businesses can now see their input tax credit balance on return forms. Turning to the international markets, and the markets whipsawed in the US, initially trading positive, but they gave up those gains after the release of the minutes of the last meeting of the Federal Reserve. For everything that went down in that market, here's a report by Bloomberg's Abigail Doolett.
It was a volatile day for stocks in Wednesday's Wall Street session. The major averages all finished lower. This after at one point during the session being up more than 1%. Now, when stocks traded sharply higher, this had to do with the Fed. The Fed's minutes were released expressing optimism around the economy, plus the idea that the Fed is on track to raise rates, that they believe that they will reach their 2% inflation target. Initially, there was a knee-jerk bullish reaction to that commentary. But then, as investors considered the idea that rates may continue to rise, inflation, something that is typically not great for stocks, especially valuation concerns around stocks, we had the pullback. In fact, the Dow dropping 0.7%, the S&P 500 down more than 0.5%. And over the last 2 days, we've had these averages lower on the 2 days, down more than 1%. In fact, the tech-heavy NASDAQ not down as much as either of the other major averages on any of these days, but down for a third day in a row. So we are seeing a return to volatility on the prospect of inflation and rising rates. That being said, one strength of source all day, the FANG trade. Facebook, Amazon, Netflix, and Alphabet all higher on the day. A source of pain, though, the chip stocks. The Philadelphia Semiconductor Index, or the SOX, down more than 1%, being dragged on by NVIDIA and AMD in sympathy with Bitcoin, down more than 10%. But the big story, rates and bonds, despite bonds trading lower and other haven assets trading lower, rising rates pushing stocks down, creating a sense of risk off in Wednesday's Wall Street session. In New York, Abigail Doolett, Bloomberg News.
Well, let's take a check on how the Indian market is looking today. And I'm joined by Darshan Mehta and Agam Vakil, who will set you up for the day's trade and also to tell you what's happened in the futures and option space. Morning, Darshan. And first to you, what's on your list today?
So, if you're looking at it, global markets are weak, and suddenly there's this big crack that's come on the SGX Nifty. It was trading rather flat, but now down just by almost 50 points. So, expect a weak opening as far as our markets are concerned. So, that's a sudden crack that's come in. As far as the ADRs are concerned, let's take a look at how the ADRs panned out in trade. Again, weakness was seen. Tata Motor continues to bleed. HDFC Bank continues to bleed. Dr. Reddy is also trading rather weak on the ADR market. Only for Infosys, which was flat in trade, and IT had a great session in our markets yesterday. But despite that, Infosys traded very, very soft in trade. Now, as far as crude is concerned, let's see, crude continues to bleed. Again, you can see that crude is down below the $65 barrel per mark. It is down almost close to 1%. As far as the base metals on the LME was concerned, let's take a look at it. It was a mixed closing, but most of them had a better closing. So aluminium and copper closed on the higher side. You had nickel, which was up almost over 1.5%, and you had tin, which was up almost over 1%. The big drop came in as far as lead is concerned, which was down in trade. Today, there seems to be some bit of action as far as Shanghai is concerned. Copper is trading higher. You have zinc, which is trading higher, and you have aluminium and steel, which are trading lower in trade. As far as the precious metals are concerned, gold is trading flat, but the others are seeing a little bit of selling pressure that's coming in. As far as fund flows are concerned, let's take a look at what the FIs did. They continue to sell. They sold in almost 1,200 crores, and DIs have bought in entire amount plus much more. So on a month-to-date basis, FIs have sold in almost 6,000 crores, but DIs have lapped in much more than that. They were lapped in almost double of what FIs have sold. Now, yesterday the Nifty Bank did well. It was up in trade, but there was selling pressure that was seen on the Nifty small cap, the mid cap, and ended flat in trade. So this was the broad setup. As far as the VIX was concerned, since the market was doing well, the VIX was down almost 6% in trade, so that's something that you need to watch out for. The Nifty IT did extremely well. It was up almost 2%, led by TCS. And the Nifty Pharma Index was down almost 2%, and this was mainly led by Sun Pharma, which fell in trade. As far as the Nifty was concerned, up 37 points. TCS, ITC, the biggest gainers, and Sun Pharma, the biggest laggard. But Agam, what are the FNOQs indicating?
Well, consolidation continues on the Nifty, considering we have seen about a 37-point increase. But again, as one might expect, a decline when it comes to open interest for the February futures. So it's the same for the Nifty as well as the Nifty Bank futures, where we have seen a little bit of a decline coming along, though we have also seen a little bit of accumulation in the subsequent series. The India VIX, of course, has fallen now below the mark of 16, but when it comes to the put-call ratio, again, not too much has changed there either. Currently standing at around 1.17. That said, moving in terms of the way things have changed in options, we're looking at unwinding in the 10,400 call, where do remember there was more accumulation the day before. We do have Dish TV, which moves out of the ban, but I'll come back to Dish TV. As far as rollovers go, standing at 39%, and this particular number is slightly lower than 2 days, or rather a day left for expiry. So we'll have to wait and watch whether or not this particular number picks up eventually. Of course, usually this number ideally should move above at least 60 to 65% for us to establish that a substantial amount of traders have taken positions and carried them forward. That said, Dish TV moves out of the ban, and we're keeping an eye on several other stocks like Reliance Naval, which saw fresh longs accumulate across all series, and we're also keeping an eye on something like a Mindtree, which also saw fresh longs building in. So plenty of stocks to keep an eye on, but the way things are stacked up right now, we can expect a little bit more consolidation for as far as the benchmarks go.
Absolutely. Thanks for that, Agam. Well, there you have it. That's the view on what's expected in trade today. But clearly, there's a lot of weakness in the global equity markets, and that has bled in from the US markets into the Asian markets as well. And with that, let's take a check of where the Asian markets are at right now. The Nikkei, at least in Japan, is down about 1.3%. But remember, the markets in Shanghai returned today after a long break. Let's head across to Rosalind Chin, who has all the live updates from the Hong Kong studio. Morning, Rosalind.
Good morning. Yes, you're right. Well, Shanghai is back online finally after the Lunar New Year holiday, and that currently is the only market which is open just a few moments ago, still hanging on to gains right now, up by 1.4%. But of course, we could see all of that change in the course of this session. The Hang Seng also trading lower. That also came online less than 10 minutes ago, down by 1.17% at this hour. So generally, yes, they've caught a bit of this little bit of a flu from the US. Futures are pointing lower today, and that's after, of course, the January Fed minutes did show that there was increasing confidence that economic growth would pick up, and of course there's all kinds of concerns around what that might mean for Fed policy going into the future. Now, MSCI Asia Pacific right now is losing about 0.75%. The topics in Japan falling for a third day. Automakers and banks really dragging on that index. Rico on the Nikkei is falling by a fair bit this hour. Now, it had, in fact, been down by more than 6% at one point. That's after the Nikkei Shimbun reported that it was facing an impairment charge of up to 100 billion yen on underperforming North Korean operations. Now, Rico is telling Bloomberg that it has not determined if the write-down will be necessary, but it is conducting a regular impairment test. So it hasn't got a number yet, if there will be an impairment charge or not. But still, shares have been reacting on that news as well. Over in Australia, the S&P ASX 200 giving back earlier gains, now losing just under a fifth of 1%. Nine Entertainment, though, bucking that particular trend, up by more than 20% at one point, but now gaining nearly 18%. That's most on record when it rose 22% earlier. But it did say it expected between 1 and 2% Metro TV market growth this year, so that's giving its stock a boost. And Qantas in the airline space rising as much as 9.7% on record first half profit. Underlying profit before tax in the 6 months ended 31st of December rose 15%. Also, it announced nearly $300 million in share buybacks, and that, of course, another thing for investors to help drive up the price as well. Back to you.
Thanks so much for that, Rosalind. Let's quickly take a check on the commodity space now, and Jayesh Khilnani joins in with all the updates in that market. Jayesh, over to you. Morning.
Morning, Alex. Let me start off with oil prices, which are actually trading 1% lower in early Asian hours. Now, this is on the back of, despite the OPEC assurances, the market is not quite confident of the US output, and traders are in fact watching out for the inventory data, the weekly inventory data that we get. Based on this, Bank of America is seeing that crude will largely trade in the range of $50 per barrel to $70 per barrel, up until 2023. As far as base metals are concerned, the LME base metal index in fact snapped its 2-day losing streak, and it ended about 0.4% higher. Copper rose for the first time in over 3 days now. Now, this is on the back of a comment where Glencore says that the market will probably remain in substantial supply deficit mode, and inflation has come back. That will boost commodities outlook. That is on the back of a JP Morgan report as of yesterday. As far as other base metals are concerned, nickel, aluminium and tin rose, while zinc and lead dropped on the London Metal Exchange. As far as gold prices are concerned, we saw that gold has actually wavered and stabilized near the 1325 mark on the back of the economic optimism that has boosted dollar and equities. The Federal Reserve meeting actually showed that there is increasing confidence in the US economy gaining more strength from here on, and that's the reason we saw gold actually fell from the day's high point.
Thanks for that, Jayesh. Now, the Nifty 50 index is set to shuffle its back. It's a semi-annual rebalance that it does. 3 stocks are going in and 3 stocks are going out. What are those stocks, and what are all the details with regard to the new weightages? Well, Darshan Mehta is here to tell you all about that. Darshan, over to you.
Yeah, so Alex, again, it seems that financials are getting extremely strong on the Nifty. So Bajaj Finserv comes in. Grasim makes a comeback into the Nifty after it was excluded because of corporate actions with AB Nuvo, and Titan is coming into the Nifty for the first time. So these are the exclusions into the Nifty 50. As far as 3 stocks go, is Ambuja Cement goes out. So now Ultratech is the only one. Grasim is a semi-cement thing. So Ultratech will be the only pure play cement counter on the Nifty. The weightage of pharma even goes down because Aurobindo is out, and Bosch, both of them have been in the Nifty for a brief amount of time. Bosch, the only auto anchor company on the Nifty, goes out. So that's the queue that's coming in as far as which are the entrants and which are the exit. Now the Nifty next 50 is also important, which are the companies coming in: AB Capital, Ambuja Cements, Aurobindo Pharma. So from the Nifty, these 2 are shifted here. Apart from it, the other companies that will come out on the Nifty next 50 is Nifty Bosch, GIC, L&T Finance Holding and SBI Life Insurance. So this is the companies that come in. What goes out is Bajaj Finserv, because that goes into the Nifty. The GSK twins, Glenmark, also goes out from the Nifty next 50. The other counters that go out will be Titan, because it's moved on to the Nifty, and Tata Power and Torrent Pharma also go out from the next 50. So this is basically the Nifty Junior. Now, how will the weightage be on the Nifty post the inclusion? Now this is from IDBI Capital. So financials have the biggest chunk on the Nifty. They will have close to almost 35% on that. Energy, IT, consumer will have the largest chunk as far as the sector weightages is concerned. So this is broadly the sector weight. So because of the inclusion of Bajaj Finserv, the strength of the financial services even goes higher now on the Nifty. Now, so basically this is what exactly happens. Alex, why is this important? Given the fact that a lot of global companies and global indices map their indices to the Nifty. So over till April 22nd, when this entire scheme of arrangement takes place, they will have to make the changes on their. So there will be selling of the companies that are excluded, and they will buy stocks of the companies which are included.
All right, so we can expect a lot of movement in the stocks that you've just mentioned. Thanks so much for that, Darshan. And of course, there's going to be a lot more analysis over the course of the day on that topic, so do stay tuned to Bloomberg Quint. But let's talk about the other big development from last evening. The minutes of the Monetary Policy Committee meeting of RBI shows that the committee decided to keep the interest rates on hold as it sought to support a nascent growth recovery. At the meeting on the 7th of February, the MPC voted to keep the rate at 6% by a vote of 5:1. Now, RBI Governor Urjit Patel noted that food and fuel inflation had risen and inflation expectations remained elevated. RBI Deputy Governor Viral Acharya said that the prevailing economic conditions may have prompted a pure inflation targeting central bank to switch its stance from neutral to withdrawal of accommodation. MPC member Chetan Ghate voted to keep the rates on hold, but has opined that adverse supply-side shocks could pose a strong risk to the medium-term inflation target. While 5 committee members voted for a status quo, Michael Patra, Executive Director at the RBI, voted for a 25 basis point hike. And committee member Ravindra Dholakia said that along with the centre's finances, watching state finances is important to understand the extent of fiscal slippage. Well, it's been over a week since the banking system was stunned by the over 11,000 crore PNB fraud. Investigative agencies continue to tighten the noose around all Nirav Modi group companies, and regulators are looking to tighten norms. The government, on its part, is confident that a fair probe will be conducted. Charlene D'Souza has this report on how the CBI is presenting its case.
The Central Bureau of Investigation Special Court said that the 6 people which were arrested on Tuesday night will continue to remain in the remand custody of the CBI till the 5th of March. And the public prosecutor argued that the 2 people that were arrested in the Mehul Choksi case, that is Nitin Shahi and Kapil Khandelwal, who are both employees of the Mehul Choksi group, were part of the modus operandi and had availed facilities of foreign letters of credit and letter of understandings, and will need more time to interrogate the 2 people arrested in this case, as there is a wrongful loss of rupees 4,886 crore. While the defendant's argument was that all the documents have been submitted and the 2 need not be kept in jail for further interrogation. In the Nirav Modi case, however, the public prosecutor argued that Vipul Ambani, who was the president and finance who was in fact the head of President and Finance at Firestar International till November last year, was aware of all the transactions with Punjab National Bank officials, even some of whom are at the head office level. However, the defendant argued that he was not aware of any of these transactions. Now, Kavita Mankikar and Arjun Patil, both from Nirav Modi Group companies, also played a key role in applying for LOUs, and records were found at their office. The public prosecutor argued that the bank has already incurred a loss of rupees 6,000 crore and this amount could go up further, while the stock market has already seen a loss of rupees 49,000 crore so far.
Meanwhile, Nirav Modi's advocate Vijay Agarwal has moved a request in the court stating that the CBI should restore the sealed services of Firestar International. He says that the CBI can't stop the functioning of a company. Listen in.
Today, 4 accused in the case were produced before the court, 3 private persons, out of which 2 were represented by me, and one of them was a lady. The court, after hearing the arguments of both the sides, have been pleased to remand them to the police custody till 5th March. 5th March, they shall be produced again. We have also moved 2 applications. One application is regarding that whatever seizure CBI has made, a copy of the same is to be given to us. And second application is that 2 servers of the company of Firestar, one is sealed and one is taken away by CBI, because of which the functioning of the company has stopped. So these servers should be restored, and we do not object to that CBI may have a clone copy of the same, but they cannot seal and stop the functioning of the company.
All right, and I'm sure lots more developments in that story will emerge, and you'll find all of those details right here on Bloomberg Quint Live and on the website bloombergquint.com. The Employees Provident Fund Organization has cut interest rates on deposits to 8.55% for FY18 compared to 8.65% in the previous fiscal. This is the second time in 2 years that the EPFO has effected a cut on its interest rates. In what might come as a temporary relief for Indigo, Pratt & Whitney is said to have found a quick fix to its engine troubles, something that had forced the airline to ground more than 10 aircraft recently. Bloomberg News' Anurag Kotoki joins in with more details.
Pratt & Whitney, the American engine maker, is proposing a new fix to its engines on Airbus A320neo planes. The last issue, which came up about a week back, forced grounding of several aircraft across the world, including 3 by Indigo, which is the world's biggest customer for the plane. Now, Pratt & Whitney is proposing to replace a new engine seal with an old one, which will get its planes flying for the time being. It's not a permanent fix, but a temporary one, but at least it will get the planes flying. And the European Aviation Safety Authority has already approved this fix, and sources tell us that this will result in all the grounded planes flying again in the short term.
Well, the grounded planes, of course, were the A320neos that Indigo has inducted into its fleet. But let's go to Shraddha Babla now, who has all the stocks that you have to watch out for. The stocks, of course, that have been in the news. Shraddha, morning.
Morning, Alex. To start off with, we're tracking Glenmark Pharmaceuticals. Now, this company has entered into exclusive collaboration agreement with South Korea-based SCD Pharmaceuticals, and that is for developing and commercializing 6 ophthalmologic products in US and Canada. So, under this agreement, the products will be developed and manufactured by SCD Pharmaceuticals in South Korea, whereas Glenmark will have market authorizations and will commercialize the products in North America. Now, Glenmark is expected to file 6 ANDAs beginning the first half of 2019. So it's a little while away. We might not really see a big, sharp reaction on Glenmark Pharma. Hudson Agro Products, where the board has approved raising of up to 550 crores via rights issue. The signed board has approved reduction of non-resident investment from the existing 100% to 49% of the company's paid-up share capital. Mahindra Logistics has said that they will, or they have opened the largest multi-user facility in Chakan in Pune. You also have a ET report which has said that Jammu and Kashmir Bank has disclosed exposure to Mehul Choksi's Gitanjali Gems, and the bank is yet to take action to recover dues to the tune of about 152 crores. You could see some negative reaction there. And lastly, on the back of bulk deals, we are tracking Indiabulls Ventures, where Valiant Mauritius Partners bought 0.7% stake in a bulk deal yesterday.
Thanks so much for that, Shraddha. Let's move to the big brokerage calls of the day, and Somit Sarkar has a few to tell you about. Somit, morning.
Good morning, Alex. On the big brokerage calls for the day, first we have a Credit Suisse on Britannia. Now, they have initiated coverage on the stock with an outperform rating and a target price of 5,550. Now, according to the brokerage, Britannia is well positioned to consistently gain market share. They're expecting the market share to gradually increase from 32% to high 30s. Now, this will be mainly on the back of increasing share in the Hindi belt, led by distribution expansion, also because of launch of premium products and because of shift from organized sector to the unorganized sector to the organized sector. Now, they're expecting the revenue to grow at a compounded annual growth rate of 13% over FY18 to FY20. Also, the brokerage is expecting margin expansion to restart in the company as input costs are coming off and cost savings have been seen on the company side. Now, they're expecting the margin expansion to start from FY19 itself. Now, the brokerage is positive on the non-biscuit segment of the company for the long run, but is concerned on the dairy segment. Second, we have Credit Suisse on Escorts. Now, the brokerage has maintained its outperform rating with a target price of 1,040. Now, that dealer check suggests healthy demand trend in tractors. Now, they are seeing a strong offtake in January month, which is usually lean for the tractor demand. Now, also according to the brokerage, the dealers are expecting this momentum to continue over the next few months. Now, dealers have also acknowledged the positive changes in companies functioning over the past few years. Also, Escorts tie-up with the DLL group is helping the companies to gain more volumes. Also, the brokerage is preferring Escorts on the back of its tractor demand, margin expansion and attractive valuation. Lastly, they are saying that they are expecting the company's earnings to grow at a compounded annual growth rate of 25% over FY18 to FY20.
Thanks, Somit. Now, Tamil actor Kamal Haasan has launched his party named People's Justice Party in Madurai. Aam Aadmi Party founder Arvind Kejriwal was also present at the meeting to announce the name of the party. Haasan started his political bid by visiting former President APJ Abdul Kalam's birthplace in the morning. He then addressed a rally alongside fishermen from Rameswaram. His foray coincides with Rajnikant's decision to join politics, causing speculation that the two could join forces. But Kamal Haasan has said that Rajnikant's political bid has a hue of saffron.
இது உங்களுக்காக ஆன கட்சி, மக்களுக்காக. நான் உங்கள் கருவி, உங்கள் தலைவன் அல்ல. இது தலைவர்கள் நிறைந்த கூட்டம். இந்த மக்கள் கட்சியின் பெயர் கேளுங்கள், அமைதியாக கேளுங்கள், சொல்லுகின்றேன். இந்த கட்சியின் பெயர் மக்கள் நீதி மையம்.
He says that he is not the Talaivar. Well, as investigators continue in the 11,000 crore PNB fraud case, the political fallout of the case has only intensified, with both the BJP and the Congress quick to blame each other. Bloomberg Quint's Tamanna Inamdar caught up with former Finance Minister Yashwant Sinha and began by asking him about the political ramifications of the fraud on the Modi government. Listen in.
If the scam started in 2011, then we should have a clear picture of how many letters of undertaking were issued between 2011 and May 2014, which is when UPA was in power, and how many LOUs and amounts of money involved were issued after May 2014. This will clearly indicate the involvement, if at all, of the two governments. The second point is that for the Congress to say that the Finance Minister and the Prime Minister are personally involved is completely erroneous, because, again, as I have said, no Prime Minister certainly and no Finance Minister even would ever be able to supervise the day-to-day functioning of a bank or any other institution under his control. But still the fact remains that the Prime Minister and the Finance Minister of the day are responsible constitutionally for whatever happens under their charge. So therefore, as far as Parliament is concerned, as far as our democracy is concerned, it's the government of the day and the minister in charge who is answerable to the people of the country. But it is only an investigation which will establish whether anyone was personally involved at the political level, either in the earlier regime or today.
No, absolutely. And in this article that you're talking about, the one you wrote for NDTV, Mr. Sinha, you also talk about your own experience with the Ketan Parekh scam. You also talk about the Harshad Mehta scam and how you as Finance Minister were held responsible then. What struck me reading that bit in your article is that so many years on, we're just seeing more and more scams. If steps were taken then, would things have been different today?
Let me tell you about the 1992 Harshad Mehta scam. I was part of the Joint Parliamentary Committee which inquired into it, and it was a committee which, under the leadership of a congressman, did a splendid job. We made a series of recommendations about improvements to be effected in the banking system, as in many other areas, in the stock market and other areas. Now those recommendations were wholesome and they were implemented by whichever government was in power. I remember when I took over as Finance Minister in 1998, there were some recommendations which had still not been implemented, and I saw to it that they were implemented. But despite the implementation of those wholesome recommendations, the Ketan Parikh scam took place in the stock market with the involvement of some banks in 2001. So clearly, the scamsters, the fraudsters are one step ahead of whatever arrangements you might make to prevent frauds. And that is something which has to be kept in mind. And therefore, there is a need to keep a constant watch on the systems which are in place so that nobody can take the system for a ride.
Well, clearly the discourse, both political and otherwise, on the PNB fraud case is not going to die down anytime soon. We're probably going to talk about that and a lot more over the course of the day on Bloomberg Quint Live. So do stay tuned. So apart from that, there are several stories that you can read on the website bloombergquint.com. And here are just a couple of them. Bank of Maharashtra will recall nearly 1,500 crore of perpetual or 81 bonds as it looks to retire expensive debt and replenish its risk buffers. The Mumbai-based bank will recall the notes on the 17th of March ahead of their call dates in 2020 and 2021. That's according to people familiar with the matter. Now, remember the announcement from a little over a week back that related to sharing of information by Indian stock exchanges? Well, they had at that time decided to curb all licensing agreements and stop offering live prices to international exchanges. At this point, Indian exchanges have assured their international counterparts of an orderly transition. In a joint statement, the BSE, National Stock Exchange and Metropolitan Stock Exchange said that steps would be taken to ensure that ending licensing pacts do not disrupt the markets. Well, that's all we have time for on Daybreak, but up next is all you need to know, so do stay tuned. Thanks for watching. This is Bloomberg Quint.
Are we live? Welcome to programming that's insightful, authoritative, and
marquee investors across the world until now.
more than just business news, we're news for business people.
Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. I'll speak about the general trade setup. And it does not look good at this point of time. The Nikkei is down almost 1.5%. The SGX Nifty is down almost 56 points. So the selling is definitely there as far as our markets are concerned. As far as the ADR pack is concerned, there was selling there. Apart from Infosys, which ended flat in trade, most of the other ADRs were down in trade. So Tata Motors was down 2%, Wipro was down 2%, HDFC was down, or HDFC Bank was down almost 2%. The only saving grace was Infosys, which was flat, nothing compared to the 2% move that we saw on the IT sector as far as our markets were there. Now, as far as crude is concerned, crude is trading weak. It's down almost 1%, both for the WTI as well as Brent. So there is definite weakness that's coming in on the crude. Base metals on the LME had a mixed closing. If you're looking at most of the base metals, they had a mixed closing. So aluminium and copper were up in trade. Nickel was up in trade. Tin was up in trade, but there was heavy selling that was going on in lead. Zinc was flat in trade. Now, markets in Shanghai have reopened today. Not very positive cues coming in on the commodity side. Zinc, aluminium, and steel, all three are down anywhere between 1 to 1.5%. As far as precious metals are concerned, trading very, very flat. Gold is flat in trade, but there was a little bit of selling pressure seen in silver, platinum, and palladium. Now, with every rise in the market, FIs are using that opportunity to sell in the market. They sold it 1,200 crores in the cash market. DIs bought in 1,300 crores in the cash market. So overall, FIs in this month have sold in 6,000 crores, and DIs have bought in almost 11,000 crores in this cash market. Now, which were the sectors which did well, which didn't do well? The broader markets were rather flat in trade. The Nifty Bank ended with a positive bias. Apart from it, if you're looking at the India VIX, that fell in almost 6%, given the fact that the market was rather stable in trade. The big outperformer was the Nifty IT, which was up almost 2%, and the big drag was the Nifty Pharma, which was dragged down by Sun Pharma, which was down almost 2% in trade. Overall, what contributed on the positive side? TCS and ITC, and on the negative side, it was Sun Pharma and IndusInd Bank, which contributed negatively. But Agam, what's the view on the FNO side?
Well, consolidation continues on the Nifty, currently just short of 10,400. There's unwinding in the Nifty futures as well as the Nifty Bank futures, which is because of the expiry. So as you can see, we've seen very little change in the underlying indices. That said, if we move on and take a look at the India Volatility Index, that's fallen as well below the mark of 16 now. And when it comes to the put-call ratio, not too much has changed there either, at around 1.17. Rollovers currently standing at around, nearly 40%. That's largely in line, but we'll have to see whether or not they actually pick up eventually. There you have, that's the rollover picture. But, coming down to your options, what we've seen is unwinding in the 10,400 call, and that's what stands out among the most active options in yesterday's day of trade. Moving on, we have Dish TV, which moves out of the band, so expect a trade to resume to normalcy. But we are keeping an eye on Reliance Naval, which has seen fresh longs, along with Mindtree as well, which has also seen fresh longs. So plenty of stocks to keep an eye on. We'll also be watching out for where this takes us when it comes to the markets, at least as far as the SGX Nifty is concerned, while looking at a little bit of a negative opening. That said, to address something what's happening in the American markets, the U.S. central bankers are growing more positive on the economy, and the FOMC minutes released last evening sends a strong message that substantial underlying economic momentum could mean additional rate hikes this year. And a number of participants, in fact, have marked up their forecast for the U.S. economic growth. Bloomberg's Chris Condon reports.
A somewhat hawkish set of minutes for the January FOMC meeting. A number of FOMC participants said they had already upgraded their forecast for GDP growth in 2018 when they met at the end of January. Why? Because of quickening economic activity in the U.S., a brightening picture on the global outlook, and because of the tax changes that appear or may appear to be having a greater impact on the economy than originally anticipated by Fed officials. Now, you'll recall that in the January statement, the Fed held back from changing its line on the balance of risks, but a number of the committee members were edging in that direction. So what did they do? It seems there was a compromise here. They did not change the balance of risk statement, but they added that word further a couple of times in the statement that we've spoken about a lot. So that change was explicitly in the context of the brightening outlook that FOMC officials have for growth in 2018. And for that, they said, quote, they agreed to update the characterization of their expectation for the evolution of the federal funds rate in the post-meeting statement to point to further gradual increases. So it seems clear that this was a half step by the committee in January, not a full step towards signaling a quicker pace of increases, but a half step.
Okay, the big Nifty changes have been announced, the rebalancing. 3 stocks are included and 3 stocks are excluded. So what's coming in? Bajaj Finserv, Grasim and Titan come in. Grasim makes a re-entry back into the Nifty post the entire deal. It was excluded because of the merger with Aditya Birla Nuvo. So it's back on the Nifty. Or what goes out, Ambuja Cement, Aurobindo Pharma and Bosch. Bosch and Aurobindo Pharma were recently included in the Nifty. Ambuja is there from a lot of years. So Ambuja finally goes out. So the weightage of cement actually drops significantly on the Nifty. Now the next 50, which is basically the Nifty Junior, which is included AB Capital, Ambuja Cements, Aurobindo Pharma. These two move from the Nifty to the Nifty 50. Bosch also moves from the Nifty 50 to the Nifty Next 50. GICRE, you have L&T Finance Holdings as well as SBI Life. So this is basically what has come in. What has been excluded is Bajaj Finserv, the Glaxo twins. Glenmark goes out. Bajaj Finserv is excluded because it moves to the Nifty. The other companies are Titan, which moves to the Nifty. Tata Power and Torrent Pharma are also excluded from the Nifty. So this is broadly the scope of what's happening. Now let's take a look at the weightage. Now the weightage of financial services even increases further because you have Bajaj Finserv coming in. You have energy, which actually remains at almost 15%. IT, consumer and auto. So this is basically the broad contours of how the Nifty will shape up. Metals, construction, pharma, cement and telecom. Pharma falls because of the exclusion of Aurobindo Pharma. Auto drops because of the exclusion of Bosch. Media and services have negligible weight on the Nifty. Now let's take a look at in terms of the weightages that is there. So basically, if you look at which are the weightages that will come in. So basically, if you're looking at some of the counters that will come in, why is this important? Given the fact that a lot of global funds map their portfolio to the Nifty itself. So till April 2nd, when the rebalancing will take place, these funds will have to sell the counters which are excluded and buy the counters which are included on the Nifty.
Stock of the day is Gateway District Parks. Now there the promoter has been upping the stake in the company. The last Paldi that we had, we saw the promoter actually holding in 0.6% stake in the company, buying 0.6% stake in the company for a sum of around 12 odd crore. Separately, the promoter previously has bought in 0.92% stake through open market purchase as on Feb 20. If you look at the shareholding pattern that we have back as per the BSE filing, promoter as per the December quarter holding stood at 26%, while the public shareholding stood at 74%. In terms of key investors, we have Amansa Holding, which holds more than 8.5% stake in the company and has been gradually upping its stake in the counter. Just to give you a little background about the company, it's a transport logistic company with a market capitalization of around 2,164 crore. It has 3 verticals: container freight, inland container and rail transport, and virtually it's a debt-free company. It has a low return of equity that it has seen for past 3 days at 9.32%, but however has maintained a good dividend payout ratio. In terms of the consensus rating, most of the analysts suggest a buy for this counter. 16 say a buy, while 4 say a hold, and just 1 analyst actually suggests sell. And if you look at the stock performance of the company, though for the last 12 months the company has just fetched a return of negative 18.3, we are expecting a return potential going forward to as much as 26% as per Bloomberg consensus. With that, let's toss it over to Jayesh for commodity market updates.
Thanks for that, Nikki. Let me start off with oil prices, which are trading more than 1% lower in early Asian hours. Now, this is on the back of the OPEC reassurance. Despite the OPEC reassurance, the market is still not confident of the U.S. output growth story, and traders are keenly waiting for the weekly inventory data. We also have a note from Bank of America, which says that they are expecting Brent crude to trade in the range of $50 per barrel to about $70 per barrel going into 2023. Moving on to the base metal space, the LME base metal index snapped its 2-day losing streak and ended about 0.4% higher. Copper rose for the first time in 3 days. Now, this is on the back of Glencore, which has made a comment saying that the market will largely remain substantially in supply deficit mode, and that's the reason we saw some gains come about for copper. We also have a note from JP Morgan in which they say that inflation inflation has come back, and that should be good for commodities. So, you know, more and more positive news coming in for all the commodities, the base metal space especially. As far as other base metals on the London Metal Exchange were concerned, nickel, aluminium and tin gained, while we had zinc and lead which dropped on the London Metal Exchange. Moving on to the precious metal space, gold has actually stabilized near the 1325 mark. Now, this is on the back of Federal Reserve meeting minutes which showed that there is increasing confidence in the US economy.
Well, amongst the stocks that we are tracking today is Glenmark Pharmaceuticals, which has signed a pact with South Korean-based company SCD Pharmaceuticals, and they will be together developing ophthalmologic products. Now, they will be developing 6 drugs which will be for the markets in US and Canada. Now, under this agreement, SCD Pharma will manufacture these drugs, whereas Glenmark Pharma will have the market authorization and will commercialize the products in US and Canada. But the first of the 6 ANDA filings to start, expected to start only in the first half of 2019. So not a really positive or significant reaction seen here, given that this is a while away. That apart, we're also watching out for Hatsun Agro, where the board has given an approval to raise up to 550 crores via rights issue. We're also tracking Scient. Now, the company has given an approval for reduction of the non-resident investment from the current 100% to 49%. So watch out for this stock as well. We're also looking out for Mahindra Logistics. The company has said that they have opened their largest multi-user facility in Chakan in Pune. And that apart, we're also looking out for Jammu and Kashmir Bank. Now, this is according to a ET report which has said that the bank has disclosed having exposure to Mehul Choksi's Gitanjali Gems, and they are yet to take action to recover dues of close to 152 crores. So you might see some negative reaction there. Indiabulls Ventures is yet another stock where Valiant Mauritius Partners has bought 0.7% stake via bulk deal yesterday. So you could see some reaction there as well. So those are the stocks that you need to track and trade today.
The Central Bureau of Investigation Special Court said that the 6 people which were arrested on Tuesday night will continue to remain in the remand custody of the CBI till the 5th of March. And the public prosecutor argued that the 2 people that were arrested in the Mehul Choksi case, that is Nitin Shahi and Kapil Khandelwal, who are both employees of the Mehul Choksi group, were part of the modus operandi and had availed facilities of foreign letters of credit and letter of understandings, and will need more time to interrogate the 2 people arrested in this case, as there is a wrongful loss of rupees 4,886 crore. While the defendant's argument was that all the documents have been submitted and the 2 need not be kept in jail for further interrogation. In the Nirav Modi case, however, the public prosecutor argued that Vipul Ambani, who was the president and finance who was in fact the head of President and Finance at Firestar International till November last year, was aware of all the transactions with Punjab National Bank officials, even some of whom are at the head office level. However, the defendant argued that he was not aware of any of these transactions. Now, Kavita Mankikar and Arjun Patil, both from Nirav Modi Group companies, also played a key role in applying for LOUs, and records were found at their office. The public prosecutor argued that the bank has already incurred a loss of rupees 6,000 crore and the amount could go up further, while the stock market has already seen a loss of rupees 49,000 crore so far.
Today, 4 accused in the case were produced before the court, 3 private persons, out of which 2 were represented by me, and one of them was a lady. The court, after hearing the arguments of both the sides, have been pleased to remand them to the police custody till 5th March. 5th March, they shall be produced again. We have also moved 2 applications. One application is regarding that whatever seizure CBI has made, a copy of the same is to be given to us. And second application is that 2 servers of the company of Firestar, one is sealed and one is taken away by CBI, because of which the functioning of the company has stopped. So these servers should be restored, and we do not object to that CBI may have a clone copy of the same, but they cannot seal and stop the functioning of the company.
Pratt & Whitney, the American engine maker, is proposing a new fix to its engines on Airbus A320neo planes. The last issue, which came up about a week back, a forced grounding of several aircraft across the world, including 3 by Indigo, which is the world's biggest customer for the plane. Now, Pratt & Whitney is proposing to replace a new engine seal with an old one, which will get its planes flying for the time being. It's not a permanent fix, but a temporary one, but at least it will get the planes flying. And the European Aviation Safety Authority has already approved this fix, and sources tell us that this will result in all the grounded planes flying again in the short term.
On the big brokerage calls for the day, first we have is Credit Suisse on Britannia. Now, the brokerage has initiated coverage on the stock with an outperform rating and a target price of 5,550. Now, according to the brokerage, Britannia is well positioned to consistently gain market share. They're expecting the market share to gradually increase from 32% to high 30s. Now, this will be mainly on the back of increasing share in the Hindi belt because of the distribution expansion, also because of launch of premium products and because of the shift from unorganized sector to the organized sector. Now, it is expecting its revenue to grow at a compounded annual growth rate of 13% over FY18 to FY20. Also, the brokerage is expecting margin expansion to restart as input costs are coming off and the cost savings have been seen on the company side. Now, they're expecting the margins to expand from FY19 itself. Now, lastly, the brokerage is positive on the company's non-biscuit segment for the long run, but is concerned about the dairy segment of the company. Second, we have is Credit Suisse on Escorts. Now, they have maintained the outperform rating on the stock with a target price of 1,040. Now, that dealer checks suggest healthy demand trend in tractor. Now, they are seeing a strong offtake in the month of January, which is usually a lean month for tractor offtake. Also, according to the brokerage, the dealers are expecting this momentum to continue for the next few months. Now, dealers have also acknowledged the positive changes in the company's functioning over the past few years. Also, Escorts tie-up with the DLL group is helping the company gain more volumes. Lastly, the brokerage is preferring Escorts on the back of tractor demand, margin expansion and attractive valuations.
If the scam started in 2011, then we should have a clear picture of how many letters of undertaking were issued between 2011 and May 2014, which is when UPA was in power, and how many LOUs and amounts of money involved were issued after May 2014. This will clearly indicate the involvement, if at all, of the two governments. The second point is that for the Congress to say that the finance minister and the prime minister are personally involved is completely erroneous, because again, as I have said, no prime minister certainly and no finance minister even would ever be able to supervise the day-to-day functioning of a bank or any other institution under his control. But still the fact remains that the Prime Minister and the Finance Minister of the day are responsible constitutionally for whatever happens under their charge. So therefore, as far as Parliament is concerned, as far as our democracy is concerned, it's the government of the day and the minister in charge who is answerable to the people of the country. But it is only an investigation which will establish whether anyone was personally involved at the political level, either in the earlier regime or today.
No, absolutely. And in this article that you're talking about, the one you wrote for NDTV, Mr. Sinha, you also talk about your own experience with the Ketan Parekh scam. You also talk about the Harshad Mehta scam and how you as finance minister were held responsible then. What struck me reading that bit in your article is that so many years on, we're just seeing more and more scams. If steps were taken then, would things have been different today?
Let me tell you about the 1992 Harshad Mehta scam. I was part of the Joint Parliamentary Committee which inquired into it, and it was a committee which, under the leadership of a congressman, did a splendid job. We made a series of recommendations about improvements to be effected in the banking system, as in many other areas, in the stock market and other areas. Now, those recommendations were wholesome and they were implemented by whichever government was in power. I remember when I took over as finance minister in 1998, there were some recommendations which had still not been implemented, and I saw to it that they were implemented. But despite the implementation of those wholesome recommendations, the Ketan Parikh scam took place in the stock market with the involvement of some banks in 2001. So clearly, the scamsters, the fraudsters are one step ahead of whatever arrangements you might make to prevent frauds. And that is something which has to be kept in mind. And therefore, there is a need to keep a constant watch on the systems which are in place so that nobody can take the system for a ride.
You know, a little more on the political angle of the PNB fraud case so far. Clearly, the opposition right now is making every attempt to try and make it stick on the current government, which I'm assuming any opposition party would do. The government is trying to deflect it. But do you think it will really make any difference politically to the BJP and to the Modi government?
Well, I think it will be childish to think that it will not. It certainly will, because, you see, let me make a general point. Every government and every political party is judged by the electorate, not by the standards of others and not by the performance of an earlier government. They are judged against the promises that they had made. Now, we had made a promise, a very important promise, which was a very important plank of our campaign in 2014, that we will run a corruption-free government. And there is a famous saying of the Prime Minister that na khaunga, na khane dunga. Now, people are making fun of it and they're saying khane dunga, bhagne bhi dunga, that kind of thing. So we cannot escape the responsibility that this scam took place when we were in office for the last, or we have been in office for the last 4 years. It might have started earlier, but why was it allowed to continue? That is point number one. Point number two, which we have to keep in mind as a political party, is that we cannot claim that we unearthed the scam, we uncovered the scam. Why did it take us so long to do it? And let's also not forget that the first information report, the FIR registered by the CBI, does not take us back to 2011. It talks of 2016 and 2017. So clearly, it falls on the government of the day, and we have to acquit ourselves by whatever action we can take to ensure that our image remains clean.
Well, you find that entire conversation and several other stories on the PNB fraud case on the website bloombergquint.com. You'll also find all the live market action right here on Bloomberg Quint Live. There are several stories apart from that that you should consider reading on the website. Here are just a couple. Bank of Maharashtra will recall nearly 1,500 crore rupees of perpetual bonds or additional Tier 1 bonds as it looks to retire expensive debt and replenish its risk buffers. The Mumbai-based bank will recall the notes on March 17th ahead of their call dates in 2020 and 2021. Now, remember the announcement from a little over a week back that related to sharing of information by Indian stock exchanges? At the time, they decided to curb all licensing agreements and stop offering live prices to international exchanges. Well, the Indian stock exchanges have assured their international counterparts of an orderly transition. In a joint statement, the BSE, National Stock Exchange and Metropolitan Stock Exchange said that steps would be taken to ensure that the ending of licensing pacts do not disrupt the markets. Well, that's all you need to know going into trade today. Indian Open is up next, though, and it'll take you through Market Open. Thanks for watching. This is Bloomberg Quint.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
More than just business news, we're news for business people.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. You're watching Indian Open. I'm Neeraj Shah. Good morning, Neeraj.
Good morning, Neeraj, and a very good morning to all of our viewers. Let's get to the headlines this morning. Ambuja Cements, Aurobindo Pharma and Bosch will make a way for Bajaj, Finserv, Titan and Grasim on the Nifty 50 index from April 2nd. A need to support nascent growth prompted India's Monetary Policy Committee to keep rates on hold despite rising inflation, show minutes of the last meeting. Over in the US, the Federal Open Market Committee hints at more rate hikes this year. The FOMC members believe that substantial underlying economic momentum can sustain additional rate increases. And Indigo may be able to put its 11 A320neo aircraft back in service after engine maker Pratt & Whitney is said to have found a temporary fix to the problem.
Well, a quick check in the trade setup for the day, and the handover from the US markets wasn't the prettiest, and we are likely to start off on a somber note, about 0.5% off. Expiry day, so wide ranges, but yeah, I think the giveaway from the US markets was pretty evident. The way they came off from the highs of the day suggests that this would have been the start. And Ira, does this, I mean, let's start off with that conversation first. We've been talking about this 10-year treasury yield, when it hits that 3% mark, what it could do, even though it was anticipated. Perilously close in an intraday high level at 2.95 yesterday.
Yes, I think inching close to 2.96. You know, the Fed, the minutes of the FOMC meeting clearly added a little bit of upside on the yields. But I think from all the commentary that I've read, it's not so much event-driven anymore. People seem to be convinced that the direction of the yields is going to take us to 3% in any case. I think the Federal Open Market Committee made a few comments which suggested that they're fairly comfortable with the underlying momentum of the US economy, and hence they feel that the economy is in a position to sustain rate increases. Please note, though, that it's not like they hinted at 4 rate increases. It's only in March that you will get a sense of what their rate forecast for the year ahead looks like. But analysts read into the statement to suggest that maybe you'll get not 3 but 4 rate hikes. And you know, as we keep pointing out, these rate hikes are coming against the backdrop of a time when the withdrawal of liquidity accommodation is happening at a faster pace than it was last year. And I think economists will continue to tell you that that in itself has a rate impact on the market. More often, liquidity has a rate impact on the longer end of the market more quickly than just an overnight Fed funds rate, which impacts the shorter end, and then via the shorter end impacts the longer end. So keeping those two factors in mind, I think, I mean, unless something changes quite dramatically, somewhere close to 3%, whether 3% or no, seems fairly likely.
And then the question about, you know, I think the point that you raised a few days back, that we've had yields go up in anticipation. Now we'll have the rate increases actually happen, and the impact that that has on the sentiment, because yields have already had a telling impact on sentiment as is.
Yeah. So we'll see whether, I don't know, you'll know whether the markets reacted. They reacted a little bit overnight. The equity markets reacted a bit overnight. But yes, the actual impact on the economy starts to show perhaps in the second half of the year. But the FOMC seems to suggest that strength in the economy it will sustain. And we've seen the labor market numbers, we've seen the slight uptick in some indicators of inflation as well. All of those point to strength, and of course the slack being used up in the US economy.
Just before we move to stocks though, the impact that all of this could have on the INR as well, because dollar rose post the Fed minutes, and I was reading our 5 things